Hi, Sam.
Jillian, how you doing, Jillian?
Good. Halfway to Vermont.
Oh, nice. You guys are going up early, huh?
Yeah, we have Michael, so we'll do a couple days of lessons.
Oh, nice. Good.
Yeah.
Oh, that's going to be great for you guys.
Yeah, he's excited. We're all excited.
Oh, that's good. Cool. I love that. Nice.
Yeah.
Good. Michael's going to be all nice and warm. He's going to be ready for skiing.
He's so ready.
Johnny, you ready, buddy?
Oh, he's got headphones in. He's listening to a podcast.
Oh, good.
Ready.
There you go.
Yeah, I'm ready. Hey, Sam.
Yep. Hey, Johnny. I'm going to miss you guys this year.
I know.
I know, it stinks.
You know, just not being able to do anything, and I want to take the chance of slipping on the snow and the ice. And you know what? I've just read too many stories where 3, 4, 5 months later, somebody takes a slip and fall,
Yep.
and then
Mess it all
back in
up.
for surgery all over again.
Next year, though, right?
Next year I should be ready. Yeah, I think a year out. At that point, it'll be a year and a couple of months out. I'll be ready.
Good. Good.
So I'm trying to save it up for golf come springtime.
Yeah,
I'm hoping I can do a little bit of golf come springtime. That'll be nice.
little putt-putt.
Yeah.
A little chipping, a little putting. Exactly. Correct. Where do I want this? That looks good. Fine. Beautiful. Nice. Where are you guys, Joe?
Almost in
Albany now.
Oh, good. Okay.
So two hours left.
Okay.
You're freeway.
Sam, we are already up on Facebook.
We're live on Facebook. Well, that's
Mm.
beautiful. I love that. I'm going to give it just another couple of 30 seconds, minute or so, and we will get going. Just give everybody else that wants to jump in, give them a chance to kind of jump in as well also. And jokes, any jokes? Any jokes? I still need audience appropriate jokes, Jill.
I mean, hanging around you, I don't know how many I've learned that I'm allowed to say live.
Exactly. Well, that's the problem, you know?
Yeah,
Um,
I'll leave that up to you to risk it.
Nah, I'll leave them be. I don't want to get in trouble live on Memorex. So anyway, I'm just gonna get going. Thank you very much, everybody. Again, thank you very much for joining back in again this week. We are going to talk about strategies to win in multiple offers. How do we help our buyers to win when there's so little inventory? Do we have an inventory issue? I spoke 3 weeks ago about, do we have an inventory issue? Do we have an issue of homes not selling? We spoke a lot about that. I'll bring up some of that again this week as well also. But let me just kind of give a little bit of a highlight. If you can unshare just for a second, just so I have the screen, please. Or not, that's okay. Anyway, I'm just gonna jump in. Thanks, everybody, for being here. I'm Sam Ratner, CEO, CTproperties here, Keller Williams Realty. Sure, many of you know Ruth, many of you know myself, but for those of you that do not, Ruth and I are partners, husband and wife. We own and operate a top 1% real estate team right here in Connecticut. And we're also licensed in Florida. And we have teammates in every town in the country to help support you, your family, your friends, anybody you know, whether they're out of state, moving to another house in another town in their state, and they want to find out who's the top realtor in the area, instead of just coming up with another realtor for themselves, reach out. We can help them with that, or help yourself with that as well also. We know you have choices when it comes to real estate. We're just looking to have a great conversation with y'all. The average realtor, just to give you a little bit of why I was talking about trying to help your friends or your family that's out of state or even just a couple of towns away, average realtor only sells about 10 homes a year. Last year, we sold 110 homes. I don't say it to impress you, I just rather to impress upon you. We know what it takes to be an expert negotiator for you, your friends, your family, those that you know, those in about and around you. When you buy a home, or sell a home, we know you're left with two things. When you're selling, you're left with the equity from your home and a great customer experience. When you're buying, you're left with your home and your customer experience. That's really it. So we look to make sure that you have a great customer experience. We have a full team support behind us here. Some of them are on here with us right now, helping to make sure all of this tries to run as smooth as possible. You want to do a presentation, you want to have hiccups, try doing something live. Exactly, it's always a lot of fun. Anyway, we strive to provide a stress-free and quality experience for you and your family. Just kind of a quick highlight, update who we are, what we are, and how we might be able to help you. Market watch update. Let's jump into that. Let's just kind of get going into this. I'll try to stick to the slides, and I'm going to jump around a little bit first as well also. If I get the next slide, please. Magic, and it's there. Excellent. Thank you. I appreciate it. Cool. Where are we? Not much has really changed since we met 3 weeks ago. And I look at these numbers every single day. It's not that I look at them sporadically or whatnot. I looked at them every day before COVID hit some 2 years ago. I look at them now as well also. What it's showing us is the under contract, that number in the middle. For every home that gets listed, that 860 homes, this is all of Connecticut. This isn't just Sam and Ruth business here in our local town or whatever. This is the entire state of Connecticut for the multiple listing service. For every home that gets listed, 860, 2 homes are going under contract. It's just gobbling up that inventory of little inventory that we had to begin with. For instance, when we met 3 weeks ago, now these numbers change every single day, but when we met 3 weeks ago, I'll pick a town, Cheshire, for instance. Cheshire had 20, if I recall the number, I want to say it's 26 homes active on the market. Absolutely nothing when it sells 300 homes a year. As of this morning, there was 19 homes for sale. Next town over from us, I was meeting with a client this past week doing a market analysis for them. Wallingford sells 400 homes a year. There was 6 homes on the market for sale. That was it. Yes, we have a inventory issue. Will still 5+ 2 million homes or so sell for the course of the year across the country? It will. Inventory will pick up. Buyers will find their homes. Sellers will enjoy reaping the market as well also. So thanks. Let's jump to that next slide, please. If anybody has questions, jump in, throw it in the chat box, raise your hand. We've got everybody in the background monitoring and watching what's going on. So I want to talk to you a little bit about what's going on right now with the market, what's happening with it. Interest rates have been climbing over this last week. As of this morning, I heard that some of them are running about 3.5, 3.7%. And again, it all depends upon your credit score, your rating, how well you manage your own personal finances, where you are with it. I heard of somebody else getting something well over 4%. However, they had terrible credit, which then drove up their rate. But a typical buyer, what's going on right now, is getting about that 3.5-ish%. But I also want to talk to you about, you live in the monthly payment, not the purchase price. It's kind of a really big piece there. Think about that for a second. You live in the monthly payment, not the purchase price. Meaning that if you bought, and we have sellers and buyers. Went over this last time. I'm going to keep going over this because this is a really important point. I have sellers that are saying, I don't want to sell now because what I buy, the price is going to be too expensive. And then we have buyers that say, yeah, I'm going to wait. I don't want to buy right now because prices are up. I do need a home. However, I want to wait for the prices to go down. For those prices to go down, it's typically because these interest rates are coming up. It's kind of what we're seeing in the market right now. So just take a look at the slide. If you bought 3 weeks ago, interest rates 2.5, low 3%, $350,000 home, your payments were $1,380. If you want to wait for those interest rates to climb up, Now, I'm not saying the market's crashing. I'm not saying the market prices are going anywhere. There's so little inventory. We put home on the market last weekend. We put a home on the market this weekend. We're getting multiple offers. It's going to contract by Monday. It's just what happens. That has not been changing. Multiple showings, multiple offers. Sellers are still getting really good pricing. However, if the buyer or the seller wants to wait for that interest rate to really climb up, it could be a year, could be 2 years down the road. Great prices finally came down, but now rates are up. You're gonna pay almost $150 more a month. So again, I go back to, you live in the monthly payment, not the purchase price. What's more important to you? Getting a house at a price or that monthly payment for yourself? If you're paying cash, different issue. Let's jump to that next slide, please. Anytime now. Keep on going, please. Thank you. We're going to jump into the 9 ways to help everybody understand what it takes to buy in an all cash world. It's not really an all cash world, but let's keep on going through the slides. There is no one size exactly. I want to jump into this because I really want to get to the next slide, which is the financial piece of it. But there is no one size that fits all approach for when you're buying. And there is no all cash world. It's a myth. It's not a fact. Next slide, please. Ladies. Thank you. Appreciate that. Here's financing. I'm hearing from a lot of buyers, I can't buy homes because I keep losing homes to other buyers that are buying with all cash. My realtor is telling me I keep losing my homes because I'm not a strong buyer. It's not really true. Cash buyers have not really changed historically here in our backyard. You go in a different location, you are more of a resort area, more of a single family, a second home area. That's more the case. You get down to Florida, you get over to Arizona, you get to Vegas, California, you get down to beach areas, you're going to see a lot more cash buyers as far as that goes. Here, cash has been running historically about 15%. Before COVID, 2019 into 2020, this past year, it's still running about 15%. It's been pretty standard. What's the most? It's right there in the middle screen, conventional financing, typically running about 50% of the sales. And then right behind that, we still have a good chunk of FHA buyers running at almost 20% of the market. If you're an FHA buyer, we're going to still work on getting you that home. Don't worry about it. You don't need to be putting down 20% and then some as far as cash. Keep your cash, preserve it. We're $1 million buyers that are buying FHA financing. Next, please. Okay, let's jump into one of these 9. What's the best way to be the strongest buyer possible? Your realtor is always going to ask you, are you pre-qualified? Have you spoken to a mortgage broker? Have you spoken to a bank? Do you know what you qualify for? And everybody says, oh yes, I've got this pre-qualification letter. My banker told me, or my mortgage broker emailed this over to me. Here, I'll send you a copy of it. And it's a pre-qualification. If you want to be the strongest position or have the strongest position going in to be a buyer, make sure you're working with a mortgage broker, a mortgage lender, an institution, whatever that happens to be. We have a couple of great mortgage brokers that we work with full time. We don't really work with the banks. We find that the brokers are much more beneficial for you as a buyer. Ask them for a full underwritten approval, meaning that you have given them all of your information. Not that they asked you basic information. How much do you make? When do you make? How do you get paid? What's your income? What are your expenses? They will go through and do a complete full underwritten approval. The only thing that you're going to be waiting on then is finding that home and saying, here you go, I found the home. It does 2 things for you. All your underwriting is all done. Everything is all done. The only thing you need to do is an inspection, pass your home inspection, and then tell your mortgage broker or whoever you happen to be working with, great, I'm done, do the appraisal. do the appraisal, you can typically close a couple of weeks later versus waiting a month and a half. Depending upon if that works for the buyer and for you as the seller as well also. So I like to call it, are you the chicken or are you the pig? It's an old sales line, but the chicken's not committed. The chicken just has to lay the egg. The pig, it's got to be cut from the bacon. So there's a difference between involvement and commitment. The chicken's involved, the pig is committed. Just an old sales analogy that I use, but you want to be a strong buyer, get a full underwritten approval. Next, please. Proof of funds, another great one. Number 2 here. It's not just for cash buyers. What is proof of funds? Proof of funds means that we're working with you as a buyer to help you go find a home. It may be that the home may need some fixing up. It may need that during appraisal, the bank came and said, well, certain things need to be done. And I'm going to get into another slide or two later. We're talking about contingencies and passing on contingencies. The bank may come back and say, well, this, and this needs to be done. And you already committed to the seller that if the bank says that, you're going to take on the responsibility of making those repairs before closing. Excuse me. Before closing, so that you could get a full mortgage commitment. Now that takes money to be able to make those repairs. Maybe it's chipping and peeling some paint. Maybe it's fixing a window. Maybe it's doing some minor things here and there. Maybe it takes a couple of $1,000s worth of money. To show that you are a good, strong buyer in that position, you should have cash in the bank and be able to give your realtor a statement that says, yes, I have X dollars, and if there's anything that comes up. Now, it's not just for repairs, it's also for appraisals. And I'm going to get into that later on as well also, because you may buy the home for $350,000. It may only appraise for $340,000. Has it really been happening? In some cases, it does though. Now we have a $10,000 difference. You may love the home. The bank may not say that the home is the value that you're willing to pay for it. However, you see the value in it. The seller doesn't want to reduce the home to the $340,000 purchase price. You're willing to pay that difference at closing. Now you have yourself a great home. All the more reason for proof of funds. Some states, not here in Connecticut, some states expect a proof of funds letter, meaning that don't even give me a purchase offer without showing that you have X dollars in what your bank statements show. Other states is not custom, such as here. Also, a screenshot from your phone to send to your realtor is not acceptable. It needs to be a printout from your computer. Save it as a PDF, download it, get it to your realtor. Those are kind of the benefits to make you a stronger buyer to get going forward into it. Number 3, please. Context. Context. What is context? We've had a lot of our sellers, buyers, and we've been doing it for years. It's not something new. Love letters. It's a big want for the buyer. The buyer absolutely wants to be able to show to the seller, I've got young kids, I'm moving in, I'm single, I've got through this in life. I used to live on the street. This used to be my house when I was a kid. I know your neighbor, I know your grandson, whatever the case may be. There's buyers that want to send over love letters to the sellers. We still send those over. In some states, in some areas, it's becoming unethical and not allowed by custom for certain town, states, multiple listing services to provide love letters. We still present love letters. Love letter just simply tells them again about you, the family and neighborhood, why you think that you should be the best buyer when there's 6 other buyers. What puts you in a position? Who you mortgage with? Here's another big piece of giving context. Who you mortgage with matters. I spoke about earlier about banks versus brokers. I'm not going to disparage one or the other. Some of the difference, though, is that working with a bank, the banker works there. They work there 9 to 5, Monday through Friday. They go home. They're done with their life for the most part. There's some that there's an exception to the rule. And they'll get back to you on Monday, if it's not a holiday, when they get back in the office. A mortgage broker is just like ourselves. We don't get paid until there's a closing. They're working now, I'm not gonna ever tell anybody that they're working 7 by 24. I know there's some realtors out there that will say, I work 7 by 24. Nobody works 7 by 24. We all have our families, we all have lives to still live. You call certain people after a certain hour, you're gonna get a voicemail. You should expect a phone call certainly the next day though, for sure. That's kind of the difference between a mortgage broker and a mortgage banker. We typically work with mortgage brokers for that reason. We know that you're out on a weekend, you want to put an offer in on a home. You're not going to get your mortgage banker for the most part if you need an updated pre-qualification letter. If you didn't have a pre-approval letter, your mortgage broker, you're more than likely going to get. Excellent. Thanks, please. Next. Contingencies. No pressure, no diamonds, there's struggles, there's strengths, what happens with it. There's just a couple of other ways of helping to make you the best buyer when it comes time that you're one of X number of buyers that's clamoring for this home. That home just came on the market, it's a Thursday, there's already been 24 showings, there's already a couple of offers that are coming in, maybe there's an open house on Sunday, drive more business. How can you be a stronger buyer? We spoke about one of them being have a pre-approval. Next is making sure that you're working with a great mortgage person if you're not paying cash. Some of the other pieces are of contingencies. Do I limit or eliminate some contingencies? Some of them being inspection, mortgage, appraisal. Those are the 3 top contingencies that would typically look to be eliminated or reduced. If you're comfortable as a buyer and you are comfortable with construction, or maybe you have somebody in your family or a friend that is comfortable with construction and knows homes, you may want to bring them through, just have them give a glance, have it take a look at it. Now, obviously, they can't see inside the walls. They're not going to be testing electrical outlets and plumbing and all of that. However, it seems to be a sound home. It's not broken. It's not falling apart. It's not going to crash to the ground tomorrow. You may want to say, great, I'll buy the home with no inspection. We always encourage an inspection. Some buyers will say, great, you know what, I'm very comfortable with homes. I took a look through it. I'm comfortable that I'm going to do a little bit of work to this place anyway. I'm okay with it. I'm not going to do work. It looks great. Some things will come up. The other piece of it is you may want to remove your mortgage contingency. We don't typically recommend it. However, we have had buyers in the last 2 years that have removed mortgage contingencies because they're very confident with, if the appraisal doesn't come in, they have the cash to be able to make up a difference of it. They're comfortable with the fact that their job is in a position they're not going to be losing it. And that they're very confident with the fact that they're going to get their mortgage. That's not really an issue for some people. Many people, as a matter of fact. Your third contingency over there is the appraisal. Do I waive it? I've bounced back and forth on this one a little bit already. But on appraisals, that's kind of your next contingency, because if the home was listed at $350,000 and you're coming in at $390,000, because that's what you need to do to win this home, because the seller underpriced it a little bit to drive up even more business and more activity, can you make up that difference? If you can financially make up that difference and you find a value in the home, it's your choice to waive that appraisal. Makes sense for a lot of buyers. Next, please. Escalation clauses. We've been using these a lot this year. Last year, this past year, since COVID hit, March of 20. What's an escalation clause? It makes you a strong offer. It gets you to a highest and best offer. What is it? What does it mean? It means that we have all these other offers, all these other buyers that are putting their offers in, and they're saying, I'm going to pay $350, $360, $340, $337, whatever those numbers happen to be. You have the money. Again, these other contingencies that we were just talking about, you have the financial means to be able to do this, and the house just works for you and nothing else in a home has worked that you could find you and a family or you and yourself living in. You could say, great, you know what, I'm willing to put an offer in of $360,000 on this $350,000 home. However, I'm willing to go up to $380,000. I'll pay $1,000 over the highest offer that you get. If that highest offer is 374, and you have in there an escalation clause that says I'll pay $1,000 over that, well, that's your opportunity to win that house now for 375. You only put the offer in a little bit less than that, but that's the opportunity. If you have questions, raise your hand, throw the chats up. There's a lot that goes into it. Feel free, give myself, give Ruth a call, give us a call on the team. We've got licensed realtors on our team. We're gonna be here. We're gonna be here for support for you. Next slide, please. We have a lot of this going on consistently, excuse me. Number 6, post-closing occupancy. Have a couple of them going on simultaneously right now. What is it? You're the buyer. Maybe you're in a rental. Maybe you've already sold your home. Maybe you're living with friends or family. You love the home, you write the home, you get it in contract. However, the seller just can't find a place to move to. They can't find a replacement home because they're in the same situation you are, is trying to find that home. We have a number of times where we get to closing, the house becomes yours, you sign the mortgage documents, you agree to give the seller a certain period of time. Is it 30 days, 45, 60 days? It's usually not more than 60 days. It's somewhere between that 30 and 60 days. You allow them to stay in their home. Maybe they pay you rent. Maybe they don't pay you rent. That's just another part of what makes you a stronger buyer. Does the seller need to find a replacement home? Are you letting them stay in their home and not charge them rent? It's a lot of conversation that we have. How, when, why, how do we do it? We have all this conversation with our buyers all day long. Just makes you a stronger buyer. If you know your mortgage is X dollars and you're comfortable with that, and it's an offset to help you get that home, you'll just be a stronger buyer for that seller. Listen, I'll pay you X dollars. You could stay in your house for up to X days, and I'll charge you X dollars for rent to cover my mortgage, or I won't charge you anything. Or my mortgage is X dollars and pay me half of that. There is no, this is the way it happens. There's a lot of different opportunities. Hope that makes a lot of sense. And I'd love to dig in more with you. Next slide, please. Cash back offered programs. Okay. How do buyers buy homes in cash? A lot of buyers that are asking us, how are all these people buying homes in cash? Well, we just saw only about 15% of the buyers are buying cash homes. Well, here's a couple of ways that they're doing it. They bought a home a number of years ago, husband and wife, they lived there. Maybe they bought it in 15, they got married, now prices went up. 2020, 2021, they've got a lot of equity into that. Maybe they had money, they paid off the house, they've got all this cash, they sold it and they moved in with the family, moved in with a friend, something to that effect. Maybe they took out a home equity line of credit on their existing home because there was a lot of equity sitting in the home. And this conversation goes a lot deeper than what we're doing right now. So let me know, and I'd be happy to have a really in-depth conversation with you. But maybe it's a seller that has a lot of equity in the home, is going to the bank, going to get a loan on their home, taking that cash, and now going and buying their next home with other money that they have as well also. They find that next home, then they can sell their existing home. When they sell their existing home, it pays off the HELOC, home equity line of credit. Some people are taking out loans against their 401k loan. They have X dollars that allows them to either use it for down payment money, primarily to make them a cash buyer for those buyers that have that much cash in a 401k. Go take a loan against it, buy the new house, pay off the home, pay off the 401 over the next period of time. Borrow from mom and dad, borrow from others, excuse me. Put down a stronger deposit. It doesn't have to be a cash buyer. Stronger deposit makes you a stronger buyer as well also. if you're putting down 20%, 30%, 40% plus of cash for a deposit and financing the rest, certainly makes you a much stronger buyer than somebody doing 3.5% or 5% down. Hope that makes sense. Next slide, please. Well-written offer. Here's where who you work with matters. Your realtor that you work with has to be an expert negotiator, has to do enough business to know what a well-written offer is and be able to cover these other 7 items that I've covered prior to this. So it's really a lot of what comes down to it. And it's also the relationships. Top realtors know other top realtors, meaning that we know how each other work and we know how non-top producing realtors work as well also. Some transactions are very smooth. Many realtors we absolutely want to work with. Every now and then you're going to run into a realtor that may not make the transaction as easy, whether you're on a buying side or selling side. So it's really having that expert in your corner to be able to present an organized offer, making sure all the documents are in place, making sure that, oh, I need this also. Oh, by the way, I submitted that offer. Oh, I need this as well also. Oh, can you get me a proof of funds? Oh, I forgot, I need this. It should be all one package. It should be as stress-free as possible. It should be a easy conversation. Pete, Mary, I'm going to need 1, 2, 3, 4, and 5 from you to be able to present the offer. How soon do you think that you can have that so that we make sure we're ready for when we do want to present an offer? We're ready. I have the package. We write up the offer. We submit it as a complete package. First thing that sellers and listing agents hate, and will certainly look at a next offer, is a unorganized realtor presenting an unorganized presentation purchase package. Numbers are wrong in a contract, dates don't seem to line up, missing documents, didn't sign disclosures, not understanding what they're asking for. The seller may have said, I want this in the listing, and the buyer's agent may not have ever paid attention to it. Details matter when you're working with a professional to get you what you're looking for. Next slide, please. Coming down to the end here. I have it on this one, on this, I have the same piece of information on this slide as well also. I was talking about relationships. 8 flows into 9. The big part of it, and it's the same on both slides, pick up the phone. Pick up the phone, make a phone call, get away from text and email. Okay, that's what's going to help you be in a strong relationship as well also. We have a lot of clients, both sellers and buyers, that just want to text. And the first thing that we'll tell them as soon as we start getting that first text is, I love texting with you as well also. However, when it comes to real estate and your most expensive investment that you're probably going to make in your life, it requires a phone call, because your one question that you're texting to me turns into usually 3, 4, 5, 6 other questions and scenarios that just spider web out from there. And we want to make sure we're having that conversation with you. We want to make sure that if we say something to you and you don't understand it, that you are on the phone and we could talk about it, versus saying, yeah, that didn't make sense. Hey, Joe, what do you think Sam meant about this? I have no idea. And now you're kind of in this quandary of not knowing what's going on. Pick up the phone, both as a buyer and a seller, also us as realtors with our relationships, because it's important that when we send your offer over to the seller, that we pick up the phone, we call the other realtor, and not just send an email out and go on to our business. We email it out, we'll drop them a text, and then we'll also pick up the phone and say, hey, by the way, just want to make sure you got my text. I emailed you the offer for 123 Main Street. Yep, I got it. Great. Can I detail some of the points for you? Speak to the agent about it. Is there any points that I may have missed? More importantly, before you're writing the offer, before we write the offer, we pick up the phone, we call that realtor and say, is there anything that's important to the seller that we should know before we even write this for the buyer? So that we could talk to you as a buyer and say, you know what, I could do that, and I could do this, which would maybe make it a better and stronger offer. It's a lot that I'm covering here. Next slide, please. Kind of wraps it up first here. Don't forget, I spoke a lot about buying, but don't forget, we also get homes sold. We make it easy. We try and make it as stress-free as possible. In any given day, our staff is working along with us as well also on any given home, any given transaction. There's about 182 tasks that we're monitoring and managing and operating on a daily basis, whether it be talking to your mortgage broker, talking to the other realtor, speaking with your inspector, coming to the inspection, talking to your attorney, making sure that we're talking to the other side's attorney, making sure we're talking to all the parties, what's going on all throughout the course of the day. We make it easy. We make it look easy because we do it all day long. And sometimes we forget to communicate to the fact that here's all the things that we're doing. We put systems in place that allow you to know, we just did this for you, we just did that for you, we just sent off your contract to your attorney. We also sent the contract off to the seller's attorney. There's a lot that we're doing in the back end. So I just wanted to let you know that we get homes sold, not just help buyers buy. Next, please. And I think we're pretty much done. Need to get in touch with us. There's some points about how to get in touch with us. I don't know if there's any chat, any questions, anybody is out there. If not, I'm going to end with that. I hope everybody has a great weekend. Be on the lookout for probably 3 weeks from now. I'll probably do our next session here. Thanks a lot, everybody. Have a great weekend and look forward to seeing you next time. Give me a call. Talk to you soon. Bye.